Hello, ladies and gentlemen. It's Modern Investing on Pod TV. My name is Sasha Starr, and today's guest is Jim Eade from the Eade Foundation. Welcome to the show.
Hi, Sasha. It's great to be here. Good to see you.
Yeah, great to have you, Jim. So today market is somewhat difficult. It's climbing the wall of worries, but by the time our program started, it's all in green, as usual on Wednesdays.
Uh-huh.
Um, so the high-tech stocks, including NVIDIA, they're working very hard, especially NVIDIA, to climb resistance at 150. And it's working very hard, and it's almost there, but it's not quite there. And because next week, on 20th, we have their quarterly result, and
Which will be outstanding.
it will be outstanding. It's just interpretation of that maybe it's spectacular, but it's not quite there as
Expectations
expected.
are this high, yes.
Yeah, and
Yes.
in certain segments, it was it was obviously expected much more, and it
Yeah.
didn't work out. So,
Right.
but that's okay.
Do you think it has support at 145?
No, I think support is tactical support is 145. The deeper support is 135, I would say.
Okay.
135, I don't think it will go anytime soon below that level. And even 145, I believe, at least in short distance, for example, up to earnings, 145 is definitely support. Now, if the earnings will not be accepted as a spectacular, anything below spectacular,
Right.
then it can break 145 and go lower.
Okay.
But I don't believe that that's a scenario because from what I understand, and many companies, NVIDIA never done that on my memory, company provides some warnings that certain segments of its sales or expectations will not be exceeded expectations, or maybe even below expectations. It's nowhere been, and I think Jensen is very meticulous about managing the expectations and be very, very careful about what he says and what he does as well.
Sure.
So I expect that it will be a spectacular report. Interpretations, we will see how it will work out. Because NVIDIA has been at that level for quite a long time and it's established a pretty solid base, I don't rule a breakout to 160, maybe even 170 once report will be announced. I don't rule that out at all.
Unbelievable that we're talking this way. I remember, thinking that much lower levels we were going to get resistance from above, and they've broken through it every time. So the 150, can be broken at any time. Hello, Milan.
Yeah, that's right. Okay, so now we have Milan Somberg. Welcome to the show, and tell us about your successes in S&P 500.
Well, we talked the last time about the role of luck in our lives.
Yeah.
I'm wearing a Serbian hat over here because during the Second World War, when Hitler invaded Yugoslavia, a bomb, when I was about 4 years old, a bomb fell on the house next door and killed everybody in it.
Wow.
The house next door. And here I am talking to you. That was luck. That was
Unbelievable.
luck.
It
Now,
is.
what, and you all know, you're chess players, that luck plays a big role in chess. If you're lucky enough to face a weaker opponent, you will win more games than you lose.
Exactly. And sometimes we are talking about Irish luck, and in your case, it's Serbian luck.
Yeah, that's right. Yeah. So the role of luck, how much of a role does luck play in our investing. So if you're picking stocks, which nobody should be doing, according to us,
I would be I would be broke if I wouldn't pick stocks. I would be broke by now.
yeah.
Uh, I would sign application for a Uber, and that's about it.
Yeah. So, what we recommend is there is rules-based investing, which is always right, and there's judgment-based investing, which is wrong much of the time. Not all the time. Occasionally it works, but much of the time it's broke. So we need to play by the rules as much as possible, and we do need judgment-based investing, but we should keep it to a minimum. So the rules that we promote there's 6. One is save. Without saving, the other 5 don't work. The next one is do it yourself. When you hire a consultant to manage your money, he seems to be charging very little, 1%, 2%, something like that. Doesn't seem like a lot, but over a lifetime of investing, it can equal a year's income. So number 2 is do it yourself. Number 3 is don't pick stocks. You will be right occasionally. You will be wrong much of the time. Buy the American economy as a whole, as represented by the S&P 500. And there is a small number of investments that are based on the S&P 500, but the best of all of them is SPY. SPY has the narrowest bid-ask spread, which is a cost to investors, which most investors are not aware of. And it is available in huge numbers, so that it's an easy way to buy the American economy as a whole. The strongest economy that the world has seen in over 200 years. Will it continue being the strongest? Well, not forever. As I keep mentioning, empires have a 100% failure rate, but the failure of the American empire is nowhere in sight. So the third point is buy the American economy as a whole, as represented by SPY, which tracks the S&P 500, which is a good representation of the American economy as a whole. The fourth point is buy and hold. Don't trade. Wall Street wants you to trade. That's how they make a lot of money. Buy and hold. Warren Buffett's favorite holding period is forever. So that's 4. 5 is an adjustment to 4, because when asset allocation is thrown off by market movement, you can return back to your asset allocation, whatever it is. 50-50 works, 40-60 works, 60-40 works. All of them work just so long as you stay with it. And the last one is avoid complexity. If you have an investment that is offered to you and you cannot explain it to a 10-year-old, don't get into it. So based on those 6 points of investing, you can do very well. The American economy has been the strongest in the last 200 years, and it's likely to continue to be that way. Someday, as I said, empires have 100% failure rate. There is no failure of the American empire visible anywhere in our lifetime. So it's very simple to do that, and it's very cost effective, and it's very productive. So this morning, I sold covered calls on SPY and made, given the number of SPY shares that we have, I made more money before breakfast than I ever made practicing dentistry. And dentists make money. So I recommend that for everybody. It can be taught to the whole world, anybody. Now, I think, Sasha, what you're talking about by NVIDIA and so on, can you teach that to the whole world? Can you teach me how to do that? Can you teach that?
Wait a second. So you are implying that our goal is not investing or anything, but it's teaching how to invest. Is that the right thing? You want me to become a teacher of some kind?
What we recommend, Sasha, what we recommend is I just described these 6 points. the whole world can accept that and do as well as the American economy, which is done better than any other economy in over 200 years. And
Okay, so your
everyone
position.
can do that.
Okay, so your position is that of a teacher mind. It's not important what you are doing as long as you can explain to other people, whether the millions of other people or a couple of hundred people, it doesn't matter. But actually, your method is the brilliance of your method is possibility very quickly to teach all, including 10 years old, or even some talent at 9 years old, just as well.
Yeah, okay.
Is that possible? So
Yeah,
if I would make it as my goal to teach, I probably wouldn't be on this program. I would doing something else. However, it's not my goal to teach at all. I never even thought about teaching something like that. Although I was in my younger days, I was teaching was music and chess and so on. I'm not doing that for a number of years, and I'm not missing that because both are very,
Asha,
very difficult.
what you're doing, interestingly, cannot be done by everybody. What we're recommending can be done by everybody and do
But
as
what
well
is
as
the
the American economy.
But what is a plus in what you're just saying to individual investors like Jim or myself, the ability to teach somebody else doing whatever we are doing, if it's not our goal? It's not my goal to teach anybody. It is not. My
Sure.
goal is to do investing for myself the best possible way. And so far, it's working. And even if it doesn't work, so I will adjust what I'm doing.
Everybody's goal, everybody's goal is to make as much money as possible in a safe way. And I've just described a way that is possible for every individual on the planet. I don't want to
Okay. Milan, a question. How many covered calls you sold today?
I don't think I want to reveal that.
Okay.
Yeah.
Good reply.
Let me tell you, I sold enough to make more money before breakfast in less than 10 minutes, in less than 5 minutes than I ever did practicing dentistry. And then
You see,
yeah.
in earlier programs, you were very critical that people investing, Wall Street professionals or so on, they're making so much more money than the dentists. So now you're becoming one of them who are making so much more money investing than dentists and proctologists and gynecologists and anybody else, right?
I don't understand how somebody like Jamie Dimon can make more money in a day than a dentist would make in a whole year. I don't understand that.
How many patients a dentist can see a day? What do you think?
10 to 20, depending what is being done. Some procedures take more time than others, but the dentist would see 10 to 20, and his hygienist would see an equal number. So through a dental, sometimes dentists have more than one hygienist. So a dental practice would put between 10 and 30 patients through the office in a day. Yeah.
Okay, so you'll fix some teeth, you will do cleaning, you will do root canal here and there, and so on. So somebody will pay you for that with $100, $300, $500, whatever. So we are talking about amount what professionals normally are doing in our country. Okay. Now the people like Diamond, they are doing certain constructive work to unleash, if it's merger and acquisition activity, they're unleashing billions of dollars of value, and as they are doing that, and they're doing some fantastic acquisitions and mergers, and that making money, thousands, if not hundreds of thousands of investors who are following what they're doing. So impact of what these people are doing financially is hundreds of thousands time exceeds what even good practitioner, a dentist or gynecologist or somebody else, So here's the answer to your question why they should be paid hundreds of thousands, as much as the professionals. However, now I would like to ask you this. Yesterday you also sold some covered calls, right?
Yesterday, sorry, say again. Yesterday,
Yesterday you also sold some covered
every
calls.
day, every day that's possible, and
Every day.
only recently has it become possible to sell covered calls and cash secure puts on a
Okay,
daily basis.
Right.
Only recently possible. Yeah.
That's the
agreed.
modern investing part of it. It's
So
only
my problem is this. Okay, if you have a substantial amount of position in S&P, so you sell cover calls, you don't worry that stock will go down. Let's say S&P may go in single day 30 points down. So overall, you still keep your premium, your
Yeah.
position, of course, going down, but you don't worry about because you have large positions, so it can go down for several days and it's not really going to make any difference to you.
Yeah, sure.
However, if person would like to follow your method, in a day like yesterday, what he would have done, he would purchase, say, 10 SPY and sold covered calls against this position.
Yeah.
On a day like yesterday, S&P would go down 40 points, for example, right? So he keeps premium on his calls, but he's losing tons of money on
Yeah,
his position, right?
but listen to this, those are unquestionably. When they asked J.P. Morgan what the markets will do, he said they will fluctuate. So yes, on a daily basis, an investor following the advice that we recommend could lose money in the week, could lose money for the month, but you know that he will make money in the long run. Now, you say you may not be around in the long run, but your estate will.
Okay, your estate, I love my estate, but to me it's important to see green on my screen. Therefore, I don't care so much about my estate because my daughter and her family is self-sufficient. They don't need my estate for whatever reason. It doesn't matter how large it will be. However, what I noticed is that unless you have a large position SPY and you start and you love your method and it sounds fantastic. So in the meantime, if you start on a day like yesterday, you are down about $25,000 with a premium on calls. So you're down $25,000. So according to you, you have to bring more money and to buy equal position of S&P. So you're enlarging your position, but it doesn't save you this $40,000 or whatever you lost on the first day, because it will be spread, but not on 100 SPY, but on 200 SPY. So your loss would have been, say, $40,000. Now it's still $40,000, but spread over
we're not concerned about losing money on a single day or a single week or even a single month, knowing that over the long run, the American economy will continue to be the strongest on the planet.
And just to support what Milan's saying, the S&P 500, it just broke 6,000. It's fluctuating above and below. Yeah. I remember when I started investing, I thought if the NASDAQ hit 5,000, I would be happy.
Yeah, right.
The S&P is around 6,000. NASDAQ is around over 19,000 now. So being in the market pays. You can make mistakes, but the sense of discipline that I have, and I think that this can be shared and learned by people if they don't have it, is that, if your track record is bad, then stop doing what you're doing. If your track record is good, keep doing what you're doing.
Yeah, right.
And if you don't want to pay attention to the market, if you don't want to track it on a daily basis, Milan's approach is very, very good advice. But if you do think you're could be successful and your track record shows that you are successful, then by all means, because it's individual investors.
If you enjoy doing it too, keep doing it. Yeah.
Right. If you enjoy it and it's working, why change? So there's no reason for me to go to a conservative investment strategy that Milan is suggesting, but I can see it paying off for many, many investors who aren't as good as what they think they are. And that applies to a lot of people. So what's your track record? Take a look at it objectively. No longer wishful thinking. Don't get emotional about it. Look at it. Is my track record in investing good? If it isn't, think about what Milan's saying and pay attention to it.
Jim, from
But if
what
you're having success,
Jim, from what you just said, it seems to me that if you take the same amount of money many years ago and invested half in S&P and half in Nasdaq, your Nasdaq record would exceed S&P by miles.
yes, I agree.
Yeah.
Yeah.
Okay.
So
So
I'm very tech focused, and right now the tech stocks that I'm investing in are not taking a beating; they're just down a little bit. But their rise has been so dramatic that this is a little blip on the screen.
yeah, exactly. Especially if you're talking about individual stocks, for example, NVIDIA is working its way out to 150. It's a resistance, obviously, and it will take some time. Although I thought that it will break 150 before the report next week, but maybe it's not going to happen. Maybe it will. I really don't know about that. AMD, another popular stock, the earnings really broke it down. It went from 169 one day, I remember. It went all down all the way to 140. So I wouldn't buy it there because it still keep going down, although insignificantly, but still. So I would watch that, and as soon as there will be real support, maybe 140 is support, probably. If it will stay 140 or above for next, say, 3 sessions, I would definitely acquire.
You're talking about examples of innovation, and we should all go for innovation and not manufacturing. Both Kamala Harris and Trump promised to bring more manufacturing or to maintain manufacturing. People who are engaged in manufacturing, by and large, don't like their work. They love Fridays, they detest Mondays, and they don't like what they're doing. So let the people in the world who are good at manufacturing, such as the Chinese, let them do the manufacturing while we adhere to innovation, which we're good at.
I agree with that, with a couple of exceptions. One is things that are important for national defense. For example, chip manufacturing. The Biden administration passed the CHIP Act, and it supported chip makers in the United States, because if, heaven forbid, wars break out and you no longer can import things that are essential for national defense, such as chips, then you have to be able to build it at home. So these things, such things like when we had the COVID pandemic, the people that were responsible for taking care of people couldn't get the type of materials to protect themselves from COVID. So, because we were importing them and the global distribution system shut down, so we weren't able to import them, and we had no manufacturing capability at home to make them for those people. So we need to be intelligent about what we manufacture. But I agree in general with your assessment that the assembly line work is not good for the soul.
And you're right, too, about what you're saying, Jim. Now, what we talk about is as the market goes down and it becomes cheaper, people are running for the doors. The same people who go across town to buy their groceries for less. If something is good and valuable, such as the American economy, and it drops, you buy more. You buy more. People are running for the doors. At the other end, when it's expensive, people are
piling on.
Piling up when it's expensive.
Yep.
Same people who drive across town to save a few bucks on groceries. So, Sasha, as you talk about getting out of your investments when they drop 7%. If you're into SPY and it drops 7%, you buy more. And then it drops more, you buy more. You buy bargains in the grocery store, you buy bargains if you can get your car for less, and so on. constantly looking for bargains. Why aren't people looking for bargains in the market? They aren't, but they should be. Why are they jumping on board when it's expensive, when they should be getting out, cashing in?
What I've learned about stock investing, and not only learned by doing that myself directly for a number of years, I've learned something different. However, I was thinking that, okay, whatever I learned, maybe, yes, it applies to individual stocks, but maybe S&P 500, it's an exception. And therefore, my method would work for individual stocks, but will not work for S&P 500. And then I started to think, wait a sec. What is S&P 500? It's a 500 stocks. So if something works for one stocks, it should work for two stocks. If it works for two stocks, it should work for 20 stocks. If it works for 20, it should work for 50 stocks. And if it works for 50, it should work for 500 stocks. So what's the difference? What am I missing here? And the only thing what is there, speaking about 7%, I do believe that, of course, 7% in my case it doesn't really work because I'm selling covered calls, and the covered calls itself give me a cushion that can withstand much more than 7%. It can withstand 27%. As an example, I'll give you, for example, part of my position in
Somebody's at the door.
The dog just left. It doesn't like what we're talking about.
okay.
He's barking at the market going down. Yeah.
So let's see, part of my position in NVIDIA, let's take 1,000 shares, and my price is $140. Now, I have 10 calls, covered calls, of course, 155 September 18, and I got paid $20 for each call. So we are talking about position which is worth $20,000 here. And if stock will be below 155, which I don't think it's realistic, given we're discussing September next year. However, everything is possible. So in this case, I will keep all my premium to myself, and plus I have stock, which is 140. I don't know, it's going to be 145, maybe 135, whatever it is, $20,000 is mine to keep. However, if stock will go to 155 and higher, I will deliver the stock unless I will try to defend it. But let's see, I will deliver the stock. So 140, 100, and I will sell it at 155. So I have $15,000. So either way, I'm expecting on this deal to net between $15,000 and $25,000. So what could be so bad about this play, Jim? How you see it?
Well, my comment would be to the what the 7% rule applying to this S&P 500. You know that the S&P 500 is going to do well in the long term,
right?
But you don't know if an individual company is going to do well in the long term, and so you don't have to apply the same rules to the S&P 500. But with the case of NVIDIA, I don't see in the short-term horizon, maybe going out as far as a year. I don't know what policies are going to be put in place and what's going to happen to inflation and all those types of things. A year is a long term in my way of thinking, but I buy stocks and hold them for at least a year. And so that's normal for me. And I think the scenario that you play out is based on your past experience with this particular company. I have very high confidence that you picked a winner. And this is the kind of thing that you have to trust in yourself and your judgment. And, the judgment of people is often wrong, as Milan points out. And it could be wrong in this case. But, I have these same types of plays. And I've been promoting Marvel, MRVL is the ticker tape code for it. And that stock is taking, it's down 20, but it's over 90. And when I bought it, it was around 70. And so, these stocks are going to do well. And I don't see the same principle that Milan applies to the American economy overall. I apply to these types of stocks that are well positioned.
You say
companies.
You say that you like to hold them for at least a year.
Yes.
How do you decide it's time to sell?
I have investment goals, and when I reach my investment goals, then I start to think about selling. And if I've been holding it for a year and I've made my investment goals, then that usually triggers my intention to sell. But I reevaluate. I don't do it every 6 months. I reevaluate fairly often. And my cash allocation, right now I'm 60% invested, 40% in cash equivalents, of course, not actual cash. And this is I got a little bit more conservative because of the election. I didn't know how it was going to respond, and I know the market doesn't like uncertainty. So I might stretch that allocation and be more invested in the future. But this is the allocation of cash to investments is something that I monitor, fairly, at least once a month. And, so I may not be a typical investor. But what I have found in my past is that if I know a sector is going to do well, if all of the things in the geopolitical atmosphere that surrounds us tells me this sector is going to outperform, and I pick the best companies, the ones that have allocated certain ways, have a proven track record, have revenue, have volume, these companies are the ones that I target. And I could pick one wrong. I have too much of AMD right now, but that's a different story. I got that stock options and that were granted. So, it doesn't matter to me so much how AMD does. But, NVIDIA, Marvel, these are things that I've taken, invested in, and for the long term. And I believe that the long term, in my view, is about a year, and then reevaluate.
Let me mention something that I find very interesting that applies only to people who are comfortable with this approach, that they can sleep at night, and that is what a dentist, older than Warren Buffett, but studied with the same teacher, does. He keeps his 50-50 cash and 50% the market. When the market drops 10%, he puts a third of his cash in it. If it drops another 10%, he puts all of his cash in it. Mm-hmm. And if it drops another 10%, he borrows. Yeah.
What would be the right strategy? Remember when market in 2008 approximately lost 50% of its value. Then, okay, so you invested all your money, you borrowed the money, you sold everything, your furniture and everything else, and also invested, and then you were eating
tins.
You were eating grilled cheese sandwiches for a couple of months. So what would be the end result? You see, the problem is that market probably would recover, and we know that it did, but you may not be around at that time when market recovers. That's a problem with the investing everything.
Well, you don't really lose unless you sell, because if it does rebound, then it's only been a paper loss.
But Jim, even by eating grilled cheese sandwiches 3 times a day, or even 2 times a day, because you will not be able to afford 3 times a day. So in this scenario, you will not be around anymore. When the market will start recovering, indeed, you just won't be around. That's the end of story. You're done. You're history. So now you have to, I don't know, you might go to rob the bank and therefore to create a new cash available to invest.
Kids, don't try this at home.
Yeah, all sorts of
so let me ask you this: interest rates are low now. Is it a safe thing to do to borrow money to open a margin account for selling, and it can either be in cash or in SPY? Going to be in one of those two. If you're assigned when you have a covered call, then you wind up being in cash, which allows you to sell cash covered puts. And you keep on doing that and collecting the premium income until you're assigned, and you're back in SPY. So either you're in SPY or in cash. In between those two, you keep alternating as long as every day until you're assigned. And so then you're either in cash or in SPY, which allows you to sell covered calls or sell cash secured puts. And so now, are interest rates low enough now to borrow money to open a margin account, which we don't recommend, by the way, except Canadians cannot sell cash covered puts in a tax advantaged account the way that Americans can. So we need to have a margin account to do that. Are interest rates now low enough to borrow money to put in a margin account?
Well, the only debt that I was ever comfortable incurring was my mortgage, and so that would not be my recommendation. But that's just debt has always been one of the things when I analyze a company, I always look at debt, and so if you've taken out a lot of debt, then I look at that as a debit, and whatever assets you have, they better offset it because I don't like going into debt.
Well, I have debt on my account because I have margin account in what I'm doing, of course. But the debt is guaranteed by my account itself. So I didn't go to the bank to borrow money or anything like this. It's guaranteed by account itself. But Milan, I have a question to you. What you are teaching is a very special situation. You have to find students who have a sizable position in S&P 500 plus sizable cash of about the same amount would be ideal. So you're looking at students with a account at least $1 million plus, because if
you're right, and especially if you're dealing with S&P 500 as SPY, you're right in that respect. But people can also own Coca-Cola, which they can own at a fraction of the cost of SPY. Trouble with Coca-Cola is it allows option trading once a month, whereas SPY allows it on a daily basis.
Milan, with all due respect, there is no comparison between Coca-Cola and S&P 500 for reasons that you just stated, never buy individual stocks. So therefore, it has to be ruled out, buying Coca-Cola and selling covered calls. It's out of question. So therefore, your strategy worked particularly with S&P 500, but somebody has to have sizable position, number one,
you're right,
cash position in order to pursue the strategy. So how many students do you have? I wonder, one or two maybe would be a good figure to start.
We have about 300 members.
And all of them have sizable S&P 500 positions.
Well,
And
most of them are professional men, and if they are near the end of their career, they will have a sizable position. Yeah.
Particularly S&P 500 and cash. I'm looking only on these two positions.
Yeah, that's right. You just keep on saving until you have the right amount.
Well, if somebody is at the end of his career or her, I don't think that the problem of savings would be of any
Well, we
importance.
talked about luck earlier.
Yeah.
And one of the things. Oh, go ahead, Nolan. Sorry.
If somebody at the end of his career, if he had done the right thing, he should have accumulated enough. There was a question that was done in a survey that had a large number of individuals responding to the survey. And the question was, what would you do differently if you had life to live over again? Well, I would marry the same woman. They almost universally responded, I would start saving earlier. Yeah. Well, and it doesn't have to, there are issues that determine how much you will have saved. One is the amount of money you put in, of course. The other one is the interest that that money earns. And the third one is the time that you've had to accumulate this. Of all those three, the time is the most important. So this survey showed the majority of people, if they had life to live over again, would have started investing earlier. Time
I
is
agree
important.
with that, yes.
So time is important. So if you can't save 10% of your income, save 5%. And if you can't save 5%, save 1%. Just give it lots of time. So
Yeah, we talked about luck earlier, and I would say, in support of what you're saying, when I first started working, I was working for AT&T, and they had this program that invested. If you invested your part of your paycheck in AT&T, they would match it but up to 6%. So you're guaranteed a 6% rate of return. And so I did that because when I was young, if I saw the money, I would spend it. And this forced me to pay myself before my bills.
pay yourself first. Yeah.
So early on, I started investing, and I was lucky that it was AT&T because the stock it rose beyond money that I put in, and beyond the 6% matching, the stock went up. And then when they split into Baby Bells, the stock continued to go up, and I had enough money to buy into this San Francisco Bay Area real estate market. And so this was incredibly. It was good that I was saving early, saving often, every paycheck, but it was also lucky. If I had invested in a company that was working for a company whose stock did not perform well, I may not have been able to buy into the.
But you're right about you're counting on luck to help you.
Yes.
We're talking about doesn't require any luck. You are going to invest in the American economy as a whole.
Yes.
Don't pick stocks.
But this is how I amassed enough money to do what you're suggesting.
Oh, you're right. You're right. Yeah, that's right. Now, the professional men that we're talking about at the end of the career should have amassed enough money if they did the right thing, which is start saving early.
Right.
So that's right. Yeah.
No, we're totally in agreement then. And the target audience that you're talking to, I think it's a very smart strategy.
And simple, and it takes no time at all. And so this morning, for instance, I sold covered calls on SPY, and I made more money before breakfast than I ever did in any week practicing dentistry.
But Sasha, let me ask you a question. We're talking about seeing green on our screen.
Yep.
And does the happiness of seeing the green on the screen offset the feelings that you have when you see red?
Yeah.
For me, it does. I mean, I have more fun. Of course, we've been having more green than red. So
absolutely. Let me take a look at my screen now.
Yeah.
But you got to be able to take it if you see red. You got to be able to hang in.
Okay, I see red. In all my investments, there is only one line which is red. It's a covered calls that I sold, those that I mentioned, September 25, 155 NVIDIA calls. That's in red because NVIDIA went up so much during this time.
Yeah, because SPY is green.
Yes, SPY is green.
Well,
so is the Nasdaq.
Yeah.
So
I can't believe these numbers though. The Dow is pushing. It's 44,000. So could it hit 45,000? Unbelievable.
Is the market
Nasdaq could hit 20,000? I can't even wrap my head around this.
Is the market
S&P
going
500
up?
over 6,000?
Is the market going up because of Trump, or is the market going up in spite of Trump?
No, I think that the people the businesses are happy because they think there will be a reduction in regulations, and I think they're correct in that assumption. Is that a good thing? Are we going to get out of the Paris Accords? All of these types of things. Is Trump going to put in tariffs on all these companies? That's going to be inflationary. A lot of his policies that he talked about during his campaign are going to be inflationary. So these are not good things long term for the economy. But I think the initial reaction was positive by most of the market, and whether we'll see that in 2025, who knows? So I'm waiting and seeing. But and he may not, all the things he talked about doing, he may not do. So who knows?
Well, I think that interest rates will play a very large role in this, because if they will continue, and so far it seems to me that that's what's going to happen, they will start to lower more aggressively in 2025, because the servicing of debt today is approaching $1 million. $1 trillion a year,
Yeah.
and this is unsustainable. So if it will go to not to zero, but even 0.5, so then it would require much less efforts to service the debt. And even if you will start increasing the debt, but this is, in my opinion, secondary to lowering the interest rates very aggressively. So either way, that will be good for U.S. economy, it will be good for businesses, it will be good for people. It will free a lot of money which otherwise are tied up to servicing the debt.
And it's interesting. The Fed is supposed to be independent, but they kept it artificially low during Trump's first administration, and then they kept it high, too high, for too long in the Biden administration. So maybe they'll be pressured, and they're supposed to be independent, but maybe they aren't entirely. You know how these things work. And
let me share with you.
There may be pressure to lower.
Let me share with you a method that I use. You might laugh at it, but it has to do with the number of trucks that you see on the road.
Yeah.
When there are a lot of trucks on the road, the economy is good.
And when there's a lot of golfers, when you can't get a tee time, the economy is very good.
Yeah, well, listen, we are living in a very interesting time, and investing is getting more and more interesting.
Yeah.
And I wish you a happy week and in investing, and we'll see you next Wednesday, same place, same time. All the best for you. Bye, everyone.
Thank you.
Bye-bye.
Yeah.